All right, let's talk about a new SME IPO that's about to hit the market. Biopol Chemicals. It's in the specialty chemical space, and we're going to dig into the analysis from the experts to figure out what's really going on with this public offering.
So here's the million-dollar question, right? Is this thing a hidden opportunity, a real diamond in the rough? Or is it just a super high-stakes risk for anyone thinking about putting their money in? Well, that's exactly what we're here to unpack.
So, first things first, who are these guys? What is Biopol Chemicals? Well, in a nutshell, they're a company based out of Gujarat, and they play in two fields. They both manufacture and trade specialty chemicals.
Now, where does their money actually come from? Take a look at this. A whopping 85% of their entire revenue comes from the textile industry. That's not just a big slice of the pie, that is the pie. It tells you right away that this company's health is completely and totally tied to what happens in the textile sector.
And for anyone wondering what on earth are specialty chemicals, think of them as the secret sauce. They're these special performance-boosting ingredients that go into tons of products, from the very clothes on our backs, which connects right back to that huge textile business, to things used in farming and even home care.
Okay, let's get into the nitty-gritty of the IPO itself. It opens up on February 6th, and the price is set between 212 and 218 rupees a share. The total issue size is just over 31 crores. But here are two really important things to notice. The lot size is 1,200 shares, so you're not just dipping a toe in, that's a pretty big initial investment. And it's listing on the NSE SME platform, which is a whole different ballgame from the main market when it comes to risk and how easily you can trade.
Okay, so we've got the basics down. Now let's pop the hood and really take a look at how this company actually works day to day.
So here's a great little snapshot. They've got more than 66 products, and they're mostly silicon-based. It's a bit of a hybrid model, about 2/3 manufacturing and 1/3 trading. But check this out. Over 75% of their revenue comes from repeat customers. That's pretty impressive and says a lot about customer loyalty. But, and this is a big but, look at their manufacturing capacity. They're already running at over 93% utilization. Let's put a pin in that, because that's a really critical detail.
All right, so the business model is one thing, but does it actually make money? Let's take a look at the financials. And believe me, this is where the story gets really, really interesting.
Whoa, just look at this chart. In fiscal year 23, their revenue was just 1 crore. 2 years later, it explodes to 49 crores, and they've already matched that number so far this year. That is not just growth, that is a rocket ship, an absolutely incredible surge in a very, very short time.
And as you'd hope, that massive revenue jump is flowing right down to the bottom line. Net profits have been climbing significantly, and this year is already better than all of last year. I mean, on the surface, these numbers look absolutely phenomenal.
But hold on a second. Whenever you see a financial chart that looks like a hockey stick right before a company decides to go public, some alarm bells should start ringing. You have to ask, why the sudden explosion right now? And we're not the only ones asking. Analysts are flagging this exact point. The timing of this surprising boost is making people suspicious and raises real doubts about whether it's sustainable.
Okay, so even with that major concern hanging in the air, there is another side to the story. To be fair, let's lay out the bull case, the reasons why you might be optimistic about Biopol Chemicals.
So what's there to like here? Well, for starters, they're in a high-demand niche sector. That's a good place to be. And remember that super high customer retention rate? That suggests they're doing something right. Their products are trusted. Plus, the folks running the show have been in the chemical business for over 25 years. That's a lot of experience. And their direct-to-business model could mean better profit margins down the line. All right, so that's the sunny side of the street. Now let's cross over and look at the bear case. What are the big red flags that analysts are pointing to?
I want you to focus on just one number for a second, 70%. What's that? Well, that's the amount of their total revenue that comes from just their top 5 customers. 5. Let that sink in. If they lose even one of those big clients, the financial hit would be absolutely devastating. That is a massive, massive concentration risk.
And honestly, that's just the start of the worries. This company is a very small fish in a very big pond. Its profit margins are actually weaker than a lot of its competitors. On top of the client risk, it's up against huge established companies. But here's the real kicker for me. How are they going to use the IPO money? Remember, they're already at 93% production capacity? Well, they're not using this new cash to expand production. Nope. It's for buying land and paying off debt. That just doesn't feel right.
So all of this brings us to the price tag. And one analyst didn't mince words, calling the IPO price very greedy. That tells you there's a strong feeling out there that the company is asking for way too much money, especially when you start adding up all these risks.
So, we've looked at the good, the bad, and well, the parts that just make you scratch your head. Let's pull all this together for the final takeaway. Which brings us right back to where we began. After seeing all this, how in the world should a potential investor look at this IPO?
This really is the perfect summary of the dilemma. On one hand, you've got the promise, a specialized company in a growing field with explosive financials and loyal customers. But on the other hand, you have the peril. It's a tiny company that's dangerously dependent on a few clients, the timing of its growth is suspicious, the price seems high, and it's surrounded by giant competitors. This is the textbook definition of a high-risk, high-reward bet.
So at the end of the day, it all boils down to this one crucial question. For a small, niche player like Biopol, is their specialization enough to overcome the massive risks that come with their tiny scale? That's the core calculation, and it's one that every single potential investor is going to have to make for themselves.